Sometimes when the Bitcoin halving happens, there is also a little bit of forced selling because the Bitcoin network is governed and maintained by all its miners, all of these people that run machines. Now, when the reward gets cut in half, there is an argument to say that certain miners will be forced to sell their Bitcoin in order to remain profitable and turn off some of their machines. This is called miner capitulation. And this is the event that a lot of people are saying, look out for a short-term crash. So we'll also get into whether this cycle will have a significant miner capitulation risk or not. Now, there is something that's actually reliable when it comes to the Bitcoin halving events and the actual metrics that they change. And that is the Bitcoin mining hash rate. There are a couple metrics that you can look at. The two metrics to watch out for here is number one, it's called the pure multiple. So the pure multiple is a ratio of miner income. So essentially how profitable miners are. How profitable miners are depend on two things, right? Number one is Bitcoin's price. If each Bitcoin that they mine is very highly valued, they have high profitability. And if the issuance rate of new Bitcoin being mined goes down, their profitability drops because their earnings rate drops. So that's what the pure multiple is. And then we have the difficulty ribbon compression, or more commonly, we know that as known as hash ribbons. So the hash ribbons indicator is this average line here, as you can see, the red line and the yellow line. So what the hash ribbon tells us is it takes two moving averages of hash rates, which is the total rate of Bitcoin miners that exist in the world. So how many miners there are, how many machines there are running to mine Bitcoin. And whenever the hash rate ticks down, the hash ribbon tends to fire, which shows that, okay, mining rate is dropping because people are turning off their miners, because a lot of miners are forced out of the market, whether they are not profitable enough because Bitcoin price is dropping too much, or usually when Bitcoin halving event happens, a lot of people do need to turn off their miners as well because the rewards are cut in half. When combining these two metrics, there is a really good estimate for miner capitulation risk that Glassnode has. So what this chart on the right tells us is how likely is there to be a sell-off event because of Bitcoin miner risk. So think about it. When miners are under stress, and whether because Bitcoin price is dropping too much, or the halving event happens and their reward rate is cut in half, or both happens at the same time, some of the smaller miners are forced out of the market and they might need to sell their Bitcoin in order to recoup cost or in order to keep their machines running. This is the miner capitulation risk, and this is actually the only risk that makes sense when a Bitcoin halving event happens. When people say like, oh, crash, whatever, from Bitcoin halving, this is the only thing that fundamentally makes sense. Everything else is purely speculation. This chart on the right here tells us, okay, whenever the pure multiple and the hash ribbon both come into stress and both are showing that Bitcoin miners are under stress, that is a period when miner capitulation risk is actually high. So what you can see here is that the pure multiple is in orange and the hash ribbon or the hash rate ticking down is in purple. So whenever both of these are very low, you have a period that is highlighted here of miner capitulation risk that is in light yellow. So you see here in 2012 halving, early 2012, when Bitcoin price was dropping very low, this did happen. So in the 2012 bear market, Bitcoin price crashed too much. And yes, this led to forced selling. And then shortly after the Bitcoin halving event, November 2012, you see the pure multiple dropped a bit, but Bitcoin price was already rallying here. So this actually turned out okay. Right here. So you see this sharp drop in the pure multiple. This is because of the halving event. So the reward rate gets cut in half, but Bitcoin price was relatively stable. So miner capitulation risk was not there. And then fast forward to 2016, we have again, early 2015, Bitcoin price was too low. So miners were capitulating, but going into the halving event, July 2016, right here. So this is when you see the pure multiple dropped by essentially 50% here, but Bitcoin price was again holding relatively stable, so no miner capitulation risk. You see, even though the halving event happened, miners were not under nearly as much stress as the bear market when Bitcoin price was just trading much lower. So this is one thing that people really underestimate. The Bitcoin halving event, the supply rate gets cut in half. It's not as significant as a very low price in Bitcoin. As long as Bitcoin price holds relatively well, the supply rate gets cut in half, doesn't actually impact miners as much. So again, we can see in 2020, in the bear market, when Bitcoin's price dropped from, I want to say this is $10,000 to $6,000, you see this is when miners really capitulated. And then the Bitcoin halving event in 2020, there was miner capitulation because Bitcoin price, again, was not rallying much higher yet, right? It was still trading in that $10,000 range because of the pandemic. So when Bitcoin price does not rally leading up to the Bitcoin halving event, and then the halving event happens and the supply issuance gets cut in half, then miners actually have risk. They might capitulate, as we can see in 2020. So that is why in the current halving in 2024, this is not the case. The fact that Bitcoin's price is already at all-time high, as you can see in this black chart here. We are at 70K, above 68K all-time high. Now that Bitcoin is already at a very high price, when the halving event happens, yes, the pure multiple will drop, but the hash ribbon is not likely to fire this time because miners will still remain profitable. Because whatever supply reward gets cut in half, it doesn't matter as much to miners because of how much Bitcoin price has already rallied. So they have a very safe buffer here for profitability. That's why I'm really not worried about a crash that will force miners out of the market this time around. Would you compare this cycle and how much Bitcoin price has rallied leading up to the halving event? This is the best case scenario for the Bitcoin halving event to happen. And the chance of miner capitulation risk is much lower than all three cycles before because of how high Bitcoin price is at, relatively speaking. Miner capitulation risk is not really there this cycle around, and that's why I really don't think there will be a short-term crash, fundamentally speaking. Now, can there be like short-term volatility as like driven by speculation? Of course there can be. But the fundamentals with how miners work, the risk is not there this time around. Here is what I can take away for this halving in 2024. What is actually likely to happen? What to expect? So indeed, this cycle is different from the last three cycles, which is that Bitcoin has hit a new all-time high before the halving, right here at 70K, versus all three previous times the all-time high came after the halving event. But a lot of people are being like weirdly bearish for some reason, and they're saying that this cycle is being thrown off, and because Bitcoin has rallied too much and it has shown too much strength, and that somehow will cause a crash. Think about how weird that take is. When an asset is rallying very strong, it shows strength, it shows buying demand. So why would it be much more likely to crash with another bullish event, which is the Bitcoin halving? That just doesn't make sense to me. So the only evidence here to argue for a crash is that it's for the sake of argument, it's for the sake of speculation. Bitcoin's price being higher than usual is actually a positive sign of strength. So comparing this cycle around to previous three cycles, my takeaway is that a 30 to 40% dip, like we have seen in the 2016 halving, I think that's very unlikely. And I think much more likely is for us to see a much smaller correction and probably just some more volatile time going into the next 3 to 4 weeks. I would say a 15% drop to retest kind of the 60K range. That is going to be much more likely. And personally, I am not expecting that 60K support to be broken. This is what I'm preparing for going into the halving event.